Hey traders, welcome to another episode of Market Insights with Nebula Trades. In this episode, we're diving into SPY and going over two other key trades for the week. As always, we'll break down the Gamma, Delta, Vanna, and Charm profiles and provide trade ideas to keep you ahead of the game. So let's get into it. First up is SPY, currently trading at 585. We've identified strong support and resistance levels that you'll want to watch closely. The current data indicates solid support starting at 575, with additional support levels at 577, 580, and 583. On the resistance side, a pivot is located at 585, followed by further resistance at 588 and 590. The Gamma profile shows 55% positive Gamma exposure, indicating market makers are in a buy-to-hedge mode. This adds stability as the price moves between key Gamma magnet levels of 585 and 580. However, with 45% negative Gamma exposure, we could see increased volatility both below 580 and above 585. The Delta profile highlights a total of 73% positive Delta, suggesting that market makers will likely sell into rallies, creating resistance at higher price levels. The strongest resistance is at 585, where we expect significant selling into rallies, while the strongest support is at 580, where market makers are likely to buy into declines. Now let's dive into Vanna and Charm. We observe a positive Vanna buildup starting at 587 and peaking at 590, indicating increasing sell pressure at these levels, especially if implied volatility rises as price rallies. Vanna also reinforces the support at 580, where a reversion to the upside could occur if the price drops. Charm exposure suggests stronger buying pressure below 580, 582, creating key support zones. Selling pressure intensifies at 587, and Charm signals that market makers will increasingly sell as time passes below 585. Here's what we expect for SPY based on the current profiles. Upside scenario: if SPY breaks above 585, there's potential for a move to 590, though initial resistance at 585 is likely to hold. Watch for positive Gamma building above 585, and positive Vanna shifting to higher strikes as signals that a breakout could happen soon. Downside scenario: if SPY breaks below 580, expect increased volatility as market makers adjust their positions. Monitor for a decrease in positive Gamma and whether peak negative Vanna shifts lower. Key support levels to watch are 580 and 575. Now, let's summarize the overall bias for SPY. Short-term bias: slightly bearish as resistance at 585 is likely to hold in the near term. Mid-term bias: neutral to bullish, with a potential reversion back toward 585 to 590 if support at 580 and 575 holds. Price target: short-term target at 580, with a potential mid-term reversion to 590. For our next trade idea, we're diving into HIMS. Let's look at the key levels and what the data is telling us this week. Gamma profile. The Gamma profile shows strong stabilization around 22, establishing it as a key pivot level where the price may consolidate or bounce. Resistance builds near 23 and 25, where positive Gamma exposure peaks, leading market makers to sell into strength. If HIMS fails to hold above 22, a retracement to 20 may occur. Vanna profile. Positive Vanna exposure suggests that as volatility increases, resistance near 23 to 25 strengthens. This could limit further upside unless volatility stabilizes, which might lead to a move above 25. Vanna also increases the odds of a reversion to the upside if HIMS trades down to 20. Charm profile. Charm adds selling pressure near 25, but supports the price around 20 at 21. This creates a dynamic where market makers might sell near the upper levels, but look to buy and stabilize at the lower end of the range. Bias. Short term, neutral to bullish, with support expected around 22. Mid-term, slightly bearish as resistance near 25 may cap gains. Direction: long with caution near 25 resistance. Next trade idea, PDD. Let's dive into the data. Gamma profile. The Gamma profile shows that market makers are likely to hedge by buying into declines, resulting in stabilization near current price levels. Negative Gamma introduces more volatility, as market makers hedge more aggressively, causing faster price movements. That's why our pivot sits at 125. Below 125, negative Gamma could pull the price down to 120, which acts as strong support. Above 125, price is expected to gravitate toward 130 and 135. The concentration of positive gamma at 137 and negative gamma at 140 indicates strong resistance at those levels. However, if PDD clears this resistance, it's on track to trade up to 150. Short-term bias. Slightly bullish due to positive gamma and VANA near 135, $140. Mid-term bias. Neutral to bullish, as market makers' hedging activities should keep the price stable above $120, with potential breakouts toward $140. Direction. Long, targeting a move toward $135, $140. Price target, $135, short-term, $140, mid-term. For more trade ideas, market insights, access to real-time Greek profiles, educational resources, and an excellent trading community, subscribe to Nebula Trades. You can find more information on our X profile Trades Nebula or through our WAP page at wap.com, Nebula Trades. We're currently offering a 7-day free trial. That's it for this week's Market Insights. Remember, stay disciplined, trade smart, and let the data guide your decisions. Until next time, happy trading.